Nick, you're very welcome to the ScaleX Insider podcast. I'm really delighted and thrilled to have you on today.
Brendan, it's a pleasure. It's been a long time coming. Lots of schedules backwards and forwards, but we're here, which is great.
Absolutely. And I was saying to Rob off air, our podcast producer, you are the inspiration for me doing these podcasts, my friend.
Don't get me all embarrassed. Right, to start this off.
My first interaction with podcasts was a number of years ago, and I went into the podcast, Apple Podcasts. I searched Scale Up, and there we go. Scale Up Your Business came up, and I've been a follower from your very early episodes. So there you go. This is all your fault, by the way.
Well, there you go. Hopefully in a positive way. It's my fault. You see, it's an inspirational thing. But no, in those early days, we've spoken about this off air, haven't we? That they were a bit embarrassing. I used to be pretty average at this stuff. Got better over time.
You're a master. And we'll come to that. You're in, I believe, over your 200th episode and all across the US now. So look, we'll dive into that because you really have been a student of your own material and scaled up the podcast quite magnificently. So you're doing some amazing work, and across the different platforms, Clubhouse, we dove into that a little bit at different stages last year, and you were blazing a trail there. But anyway, and again, part of the inspiration for me doing what I'm doing now, my overall vision, which you know, is to inspire, connect, and enable millions of ambitious leaders of SMEs to scale with purpose. So I always open the podcast and ask my guests, what does scaling with purpose mean to you, Nick?
What does scaling with purpose? So considering I called my podcast Scale Up and my whole brand is about scale up, for me, I believe there's a couple of different things in this, right? So firstly, and I've said this a number of times, that you can only scale a business to the level of your identity. So let's start with identity. It's a good place as any. And I think, whenever you're trying to create something, you have to ask more of yourself, right? Which means growth and to some extent being uncomfortable, right? So the only way that you can actually ride that and go through that feeling is if you have something that's, almost pulling you towards it, because the mission, as it's sometimes called, the impact is greater than the journey itself, right? So for me, scaling with purpose is all those things combined. So it's asking something bigger than yourself. It's digging in, showing up, taking the required actions, even if it feels uncomfortable, because the impact that you want to make, for yourself or for the world is more important than anything else.
I love that. And we'll come to that aspect of being comfortable with being uncomfortable when we come to some of I want to get into the mindset, because you've done some wonderful things on that side of things, running ultra marathons and all sorts of crazy stuff. So we'll get into the mindset a little bit more as we go through the podcast. I'm keen to give the listeners a little bit of your background. I mean, before you started the Feeling Group, you had a hugely successful career in the private equity space with around 117 acquisitions. I believe that may have changed now. 24 exits under your belt over a 15-year period. So look, you can give the listeners a kind of a feel for that, and also answer the question, what made you leave something where you were clearly very successful to start up your own business, the Feeling Group?
Yeah, sure. So yeah, and I'm going to keep the story succinct because it's a long story, and it's 117 acquisitions still, but it's 26 exits. So there you go. So that has changed a bit. Yeah. So I went through the world of private equity for about a decade, and before that, I was in the world of corporate. And those places are great sort of learning points. You learn a lot from being in those environments, for good and for bad. So you learn different skills, you learn different ways of handling relationships, all that sort of stuff, which is great. So when you move from that into the world, which is a more entrepreneurial world, as long as you understand the transition, you can actually take those skills and apply them in a different way. But my background, I was involved in a whole heap of what I call turnarounds to scale ups. And I've talked about this consistently, that the same things that go into turning around a business are actually the same things that go into scaling a business. And I like to simplify most things. And I was the guy that was sent into companies when they were not doing well, usually what we would call underwater in the world of private equity, meaning that they were acquired for a certain amount of money. That valuation then declined, so they were worth less than what they were acquired for. They would call me up and they would send me in to fix them up. And then I was remunerated by effectively the value increase that was driven over time. So if I went into a business that was bought for say 30 or 40 million pounds, mid-market private equity, and then we got that business to 50 or 60 million, then, the delta between that was how I was remunerated. So it was good. It was good fun. But I grew a conscience towards the end of it, because the world of private equity has changed. And right now it's significantly different to when I left it about 4 or 5 years ago. But back then, it's a little bit like the TV series Billions. There's a guy called Bobby Axelrod in that, and it's just quite aggressive. And when you're talking about certain sizes of money, big money, 9-10 figure sums, people do things that I think can grate against values, certainly values that I had at the time. So to kind of square the circle on this long drawn out story, my father was a very successful entrepreneur, but he wasn't in my life for a long period of time. And he came back into my life in my early 30s, and I had no knowledge of this success. And I realized that I'd been spending a number of times in private equity taking advantage of entrepreneurs, because quite often, as much as there's a value exchange that happens when an exit happens for someone, quite often that foundation is then scaled so quickly and so much money is made that the money that was made initially, or the value created by that initial entrepreneur, is nothing compared to the exit value once private equity gets on it. And so I thought, do I really want to keep doing that now that I know what my dad was and how he approached things in business? Or do I want to jump onto the other side of the table and actually represent the business owner, the entrepreneur, and bring what I call private equity thinking, that very, very high level, fast growth, strategic, exit rich methodology, and give that to the entrepreneur and then help them build freedom from their businesses? Do I want to do that? And the answer was unequivocally yes. And so I quit, started the podcast. All this. This is for the listeners. And the last probably 3-4 years, I've just gone out there and sort of lived more into that mission.
Yeah, and lived into that mission. You certainly have. As we mentioned at the start, 200 podcasts, and you're now running a number of programs online. We discussed before we became on air, and really, you have to use your own kind of lexicon. You've turned up consistently to deliver value. Just want to pick up on a couple of things, going in to turn those businesses around.
Yeah.
What did you do? Typically, what was wrong and what did you fix? Because ultimately, we're getting into the fundamentals of what it is to scale a business. So can you speak to that a little bit, Nick?
Yeah, I can. And I'll talk to it maybe differently than how a lot of people talk to it, because I think one of the biggest mistakes that people make when they're struggling in a business is they try and get too granular too quickly. So the detail matters, right? The numbers, the metrics, all of that matters. But if you go there straight away, then that kind of clouds any creativity or innovation. And half the time you need to get momentum to turn a business around. So the starting point usually is, and particularly if it's a private equity business, I'll talk about that, but it's the same across any business that gets stuck, particularly on that pathway, sort of 6 and 7 figures, is, someone who starts a business, there's a certain skill set and mindset, but when you start to scale it, you're starting to work with different levels of complexity. So therefore the skill set and mindset changes. And there's one really quick fix. Okay. One super quick fix. And I found this to be true multiple times. And I just recently wrote a guide on this. You might have seen it, Brendan, which is the 5 reasons why your business will never get to 8 figures and how to fix it fast, right? And reason number 1 is you're trying to fly the plane with no direction, with no destination. And what I would normally do is I'd go in there and say, okay, what are we actually trying to do here? Right? And that's why I said it's so simple. And some people are going, what really does this work? It does. What are we trying to do? Are we trying to build this to another exit? Are we trying to change the world? Are we trying to create a product that no one's ever done before? What are we actually trying? What is this? Right? And you'd be surprised how many times, if you ask someone who's in that struggle, in that overwhelm, that question, you'd be surprised how many times they can't answer it.
So they're caught in the bowels of the business and completely paralyzed with all of the activity, and take little time to actually lift their head up and craft a vision or a landing destination. Is that what you've seen?
It's a 30,000-foot view. So it's more than just the vision. So the vision is part of it. Absolutely. It's the vision plus it's the plan.
Right.
So like, I can create a vision, but if I'm not going to take any action, or I don't understand how I'm going to get to that vision, then, you're never going to scale a business.
Yeah.
But you have to have both. So the first part is that, as simply as that, is like, okay, where are we going? Right. We're in the plane. Are we going to New York? Are we going to Barbados? Are we going to somewhere terrible in the middle of nowhere? What are we actually doing here? And okay, well, let's first work on that. And now we're clear on what that is. And in private equity, it was usually an exit, right? It was usually another destination for the business, a bigger one. And now we're clear on that. Let's work on the quality of the plan. And the quality of the plan also has to be through the lens of simplicity, which, as I think it was Leonardo da Vinci said, the ultimate sophistication, something like that.
That's
but
it.
The point is, anything complex, the more complex you make a business in the scale-up phase, the more you're going to screw it up.
Yeah, I love that. And our second principle is purpose and vision. But our fourth principle after the third, which is people, and I'm going to come to that in a little moment.
Okay.
The fourth one is planning. It's ultimately, once you know where you're going, then it's getting into the detail of how we're going to get there, and deconstructing that 10-year down into the 3-year, down into the 1 year, down into the 90 days. So that's interesting. That was also the way you approach this, and we haven't spoken about this before, so it's great to have that confirmation.
We're comparing notes, Brendan. I don't think. Listen, none of this stuff is rocket science, right? It's like, but if you're a startup guy, which a lot of entrepreneurs are, if you are the founder who stays through to the scale up phase, because remember, a lot of businesses still close down before they even get to it. You're operating with a totally different playbook. Right. So, the stuff that's going to get you to, 7 figures, even to that sort of 10 to 15 employees, or maybe 20 employees, totally different to when you're getting to hundreds.
Yeah.
So,
and let's get to that. I mean, you've hit on something there. There's none of this is new. I mean, the people have spoken about this thousands of years ago in terms of having a vision and an understanding of where you want to go, and a plan to get there. But application is so critically important, and this, I feel, comes down to the strength of the people you have in place. What did you do? What did you typically find when you went into those businesses in relation to the capability of the people within those businesses? Was it typically a clear out, or was it a recognition that the person who founded the business, who ignited the idea, who fanned that flame, wasn't the person to really scale it? There's a different skill set required. Maybe you could speak to that. And then was it a clear out, or how did you assess the capability, the competency of the team there to actually deliver on the vision once you decided where you were going to land this?
Yeah. The starting point is, if the vision is fundamentally different, because remember, there's different ownership in this world we're talking about now, then the next place to look is, are the people that are on the boat, in the plane, if we use that analogy again, are they the right people, right? So nothing's off the table. And this is something that used to come up quite a bit, so it's a good point. Is it better to work with what you've got and to help them understand the vision and then be on the journey, or is it quicker to bring in other people? And remember, pace, we're talking a lot about pace here in this world of private equity. This is not mucking around stuff. This is big numbers, fast exits, 3 to 5 years, maybe 8 max, right? From acquisition. More often than not, it was clean out. More often than not, it was, we're not going to get emotional or attached to things. Now, the only caveat to that, which I think is super important if anyone's listening to this, is you've got to be very, very careful about the culture that's been created previously and damaging that just because the capability isn't necessarily up for the task in that next part of the journey. And this is the balance. So if you look at any of the statistics in private equity, changing out a CEO is still one of the quickest ways to drive growth. Because usually the CEO was the founder, they've got their own view of what needs to be. It's easy to bring someone else in who's not attached to the legacy. But the risk of that is that the cultural elements, the values and those sort of things, different standards are then compromised. So the stuff I used to do, remember, I was going in, sometimes I was actually going in as the CEO, for a period of time, but I was very conscious of the foundations at that point because I didn't want to break the foundations, even though I had to make some pretty big decisions.
You've mentioned culture and values. How important do you feel is a strong culture and the living out of values in respect to kind of successful scale-ups?
There's two ways of answering the question, right? So you can get too caught up in it. Okay, so remember, I'm quite known for saying the unpopular thing, right? Because all the rhetoric out there will say, oh, you've got to have underpinned values that builds value, blah 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 blah, right? Yes, to some extent, but only if they become behaviors. Yeah. Right. Yeah. So you can see this all over the world of startups, right? You had the Uber debacle, the WeWork debacle. They've got great values if you go onto their prospectuses, right? Yeah. But no one lives them because no one gives a shit. Right? Yeah. So values are important if they're actually embedded and they actually drive a behavior, and that behavior then drives a result, which drives value. Okay. Yeah. That's important. So I won't get too technical on that, but that's why I'm not against that. But I think in cultures, I'll just finish on this. Cultures have to be intentional as long as the culture is enabling, as you would have said, the bigger vision or outcome. Not so it's just not lip service to everything else. Yeah,
no, I completely agree. And you need to understand, if, let's say, respect is one of your your values. And interestingly, I mean, integrity was one of Enron's values.
Great. That's a great point, but let's draw a line under that, right? Because we could probably riff backwards and forwards on many companies that are in the press right now and talk about stuff where there's no way that the values are aligned to what's going on.
Yeah, no, absolutely. And there's a wonderful book by a guy called Alan Williams called 31 Practices, and the 31 Practices is aligned to the days of the month. And essentially it's picking a behavior which represents one of your values every day of the month. So let's say respect is one of your values. It's being intentional, and maybe it pops up on your computer screen as your screensaver that, today you're going to acknowledge the server in the canteen, or you're going to be intentional about that and practice a behavior which is aligned to the values, which ultimately creates habits and forms the culture. And I think that's, there's a lot of talk about values and culture, but it's actually those, you've alluded to it, as what do the behaviors look like, so.
And there's another thing I'll add here, which I again, because I just want to share some tips with people listening, is if you want to sell a business for maximum value, and part of that play is sustainability, then the values are super important, right? If you just want to sell a business for maximum value, but you need to do it in the shortest possible time, the values are less important.
Right. Okay.
Because you're going to make decisions. It's interesting in the world of private equity, we used to kind of buy businesses quickly, slam it all together and whatever else. Yes. These days, people see underneath or in between that they didn't back then. Yes. But we wouldn't care about the values if we were trying to scale something quickly, because we would just be looking at the compounding, value on the balance sheet.
Sure. Of course, you leave the buyer with the challenge then. If they're buying more than just the inherent IP and a product, you leave the buyer with the issue.
Depends on the business too. Yeah, depends on the business too. Yeah. Right?
So look, you mentioned earlier that kind of cutthroat nature of PE, and especially coming from Northern Ireland, a lot of businesses are reluctant to approach or consider private equity as a way of scaling their business. I'd like you to speak to two things. I mean, your whole world now revolves around, or certainly depends on strong relationships with VCs and PE to do what you do. So number one, have you restored your faith in that industry? Are there a lot of good PEs out there? Would you advise SMEs to really consider PE where they have bold ambitions to scale their business?
So private equity, I don't want to paint a terrible picture of it, and that's, genuine. I mean, there's some great private equity firms out there, some stunning ones. And the other thing is, it depends on what you're trying to achieve. I often say there's more billionaires created from private equity than anything else in the world, right? Even from startups, because of the compounding effect of valuations over time. So if you want to be a billionaire, be in private equity or be in that world, right? But the interesting thing around it is, if you're going to exit your business, there isn't that many ways of doing it. Okay, so I could buy your business, you could buy mine, right? That's a person-to-person transaction pretty much, right? I mean, everything's person-to-person, but in terms of the context of what we're saying here. You could get a corporate to buy it, right? A larger corporate that is either, owned, on the public markets or whatever else. Or you're going to get a private equity firm, or more likely these days, because of what's happened in the last 5 years, it's a PE-backed firm. PE-backed corporate, sorry. So if you think about that, like, and IPOs aren't really exits. People think they are, but they're not really. They're capital raisers. So you can take money off the table, but you're raising money to invest. So it's different. So if you think about what I just said there, if you're going to sell your business, if you have an exit in your horizon, the chances are it's going to be either a strategic corporate or it's going to be a PE-backed strategic corporate. Okay. And then the PE firms is the third piece. But most of the deals I'm doing at the moment, or the exits, are businesses that are backed by private equity. So you're dealing with the business, the CEO of that business, but in the background, there's a board saying, we just want you to buy businesses.
And what are the advantages of bringing private equity to an SME? What, for those who aren't familiar with this world at all,
yep.
Which again, I come back to kind of the Northern Ireland. We've only, I think, 5 listed companies in Northern Ireland, a lot of second generation companies who are certainly reluctant. There's a paradigm there that exists that has a built-in reluctance to look at private equity as a way of bringing cash in to fuel their scale up ambition. So kind of speak to the SMEs who have that paradigm or hold that paradigm. What are the real advantages that you see in bringing PE on board?
So first and foremost, let's start with the beginning. Venture capital and private equity are fundamentally different. Right. So private equity is not there to give you money. Private equity is there to buy your business. Okay. Venture capital is there to give you money to grow. The private equity is not there to do that. There are nuances between the two, like family offices and all that sort of stuff. But to be super clear, if you're talking about mid-market private equity, I just want to buy your business. I don't want you holding on to, massive amounts of stock. I just want to buy it and I want to scale it and I want to sell it. Right.
Yeah.
So it's an exit. So to be really, I just want to be really clear on that, right?
Yeah, and normally I would draw the distinction, venture capital, and this is an oversimplification, but venture capital is aimed at the startup world, which this podcast is not necessarily aimed at. PE is the scale-up world. So if a PE comes into your business, certainly they're likely to stay there for 3 to 5 years, maybe 7 years, depending on the PE. But their ultimate aim is to scale this business and get an exit. Is that fair?
That's right. And the key thing is that you're pretty much losing control, right? So the private equity firms usually, and again, I don't want to generalize too much, but they're not coming in to give you 20% to kind of give you some seed capital to grow, right? That's a VC play. They're coming in to buy the business. Okay. So you're selling, right? So you're not controlling the business anymore. There's a board that's controlling the business. Okay. And I used to sit on those boards. So this is how I sort of know how it works, right? Now, the benefit of this, and this is the big benefit of private equity versus anything else, is that it's quite likely that you can sell your business twice. Okay. So if making a shit ton of money is important to you, right, private equity is an interesting place, because what will normally happen, and we can get into multiples and numbers if people are interested, but
yeah, and I think this is important actually in terms of and we had someone speak to our program about the importance of scaling from an enhanced multiple perspective, because at a certain level of profitability, you're only going to command 3-4 times EBITDA, but as you continue to scale, actually those multiples increase. So let's speak to that, Nick.
Okay, I can get into the technicalities of it. So obviously the smaller, so SME, SME defined as what, under 50 million, I think, isn't it? Something like that. I mean, I tend to work with businesses that are under 20 million in rev. Yeah. Okay. So I mean, I did have an argument with the, we talked about that. I tend to operate with businesses that are operating sort of under the sort of 20 to 30 million mark. Right. is kind of where I kind of get involved, because you kind of, once you get a little bit higher, you're starting to play into the private equity world a lot. And I like to get people to their first exit, what I call their life-changing money number, right? That's my big thing. And if you've got a business, let's play the numbers here. So if you've got a business that's say doing 10 million in revenue, it doesn't matter. And let's assume that that business is making reasonable net profit EBITDA. So it's making about 2 million EBITDA. So 20% sort of net margin. Okay. That sort of business will not be what we call a standalone private equity acquisition. It's too small. And standalone means that a private equity firm will buy a business within a sector or an industry, and they call it their portfolio or their platform play. Okay. And what that means is they buy and then they're going to build. They're going to bolt acquisitions on and sell. So if you're at 2 million, you might get picked up by a company backed by private equity, but you would be a bolt-on acquisition. And even then it's quite small, depending on, the size that you're playing, the market you're playing at. The multiple for a business like that, you're usually somewhere between probably 4 to 6 times profit. It depends on the industry, so don't anyone hold me to this 100%. Yeah. But 2 million EBITDA, 4 to 6 times, maybe slightly more, maybe up to 8. Now, if you get your EBITDA up to, let's say, somewhere between 5 and 8 million, okay, now you've opened up the whole world of mid-market private equity, and there are heaps of firms all over the place. And it doesn't really matter where your business is based; they'll invest where the business, wherever they see the opportunity. At that point in time, you're definitely opening up the multiples closer to 8. Certainly 10, depending on the industry, up to 12. It can be high, it depends. But let's say around that 8. So if you've managed to get your business, let's say, to 5 million EBITDA, you've got a 40 million exit on your hands there. Okay. Now, if you're the owner of that business, let's say you own half of it, right? You've got a 20 million payday there. Now, you're not going to get it all in one hit. Normally you'll get 2/3 or thereabouts up front, right? And then you'll have to roll over or carry, as it's sometimes called, the remainder. So on the day the deal is done, you're going to end up with 12 to 15 million in your bank account, okay, at a 5 million EBITDA number. Now, as I said, how do you sell the business twice? Well, the remaining money, that sort of 5 to 8 million, would be rolled over. Some of that is what we call an earnout. So you can have 2 types of earnout: time-based or performance-based. Time-based means you've just got to be there for a couple of years. Yeah. Performance-based means you have to drive the numbers. The best earnouts are time-based. I try to negotiate those for my clients. Been quite successful too, actually. That's good. Different story. And then what you want to do is you want to have a participation in the next big thing. So the best exit, right, that you can hope for is a private equity firm has backed a bigger platform. They have a pathway to exit somewhere between that 3 to 5 years. They're hungry for acquisitions. They see your business. They come and pay a good multiple for it because they can see it's going to just be accretive to their EBITDA position. You sell the business. The pathway to exit is only about another 12 to 18 months. You hang around for your earnout. You also get a bit of the upside when the big exit happens, and you get 3 payments. Does that make sense for everybody?
Yeah, and I have one friend who actually managed something akin to that. It was a textbook sale, and the company has done extremely well since. He did it for he did it because he felt that he'd taken the company as far as he could, and it was the right thing to do in terms of continuing to scale, grow the company, create wider opportunities for the team that was based there. But it was as you described that. So, in terms of in terms of the challenges that you see from business leaders who you coach, and I know you continue to coach and mentor business leaders, what are the top three kind of challenges that you see?
Yeah, so we do want to get into mindset, I think, at some point, but I'll leave that to last. So the first challenge is, as I said beforehand, I see a lot of business owners have momentum up to 7 figures. And some of them actually find it quite easy. I know there are a lot of people out there who even struggle to get to 7 figures. So we shouldn't, not celebrate that milestone, right? It's great. If you can get your business 7 figures, that's damn good, right? A lot of people don't ever get there. But I see a lot of people get there and then everything just stops. And one of the first mistakes they make, and I did write about this in my guide as well, is they're still trying to grow their business one customer at a time. And by that, I mean, it's kind of built on hustle, right? We're going to do marketing campaigns and we're going to spend some money on SEO and we're going to do you're going to be there forever. Okay. You're going to be there forever. Okay. It's going to take you. And some people come to me and go, oh, I want to sell my business in 10 years. And I go, you're mental, right? Like the pace of change. Now, this is where, again, people can throw tomatoes in my head, but look at the external world, right? Look at the pace of digital change. Look at the acceleration, right? Look at, we've just had global pandemics. Look at what that's done, right? Do you really think that hanging around for a business with a 10-year exit plan is safe? It's like the highest risk strategy in the world. Get your business done within 3 to 5 years maximum, right? Get it done. So just to draw on that. So one customer at a time, you've got to have a good organic growth strategy. Don't get me wrong. I'm not saying don't do this, but don't just do that. The second thing is you don't know how to leverage other people's money to drive growth. Okay. Now that doesn't mean getting an investor in. It just means you don't know how to use the assets on your balance sheet to invest in your business. Okay. So you should be, to grow fast, to scale fast, you need to leverage capital. And that doesn't mean, as I said, about, raising debt and equity. You've just got to get very good with managing your financials. This is the secret stuff that the playbook in private equity, people don't talk about, that they're just really good at capital management and deployment. And where they'll deploy that money, and the stuff that I talk a lot about, and this, is they'll buy other businesses, acquisitions. So one of the things I said when I left the world of private equity is I want to bring small business acquisitions, small business M&A to the world of small businesses. So I want 7-figure business owners to understand that, you can operate like the bigger, you can actually play the private equity guys at their own game, and you can create a bigger exit for hardly any real challenge on yourself. You just got to know how to do it, right? Okay.
Yeah, I mean,
and
you've hit on such an important point. Okay, we'll come to the third in a moment. I just
sure.
want to illuminate that point, because certainly, having been immersed in scale-ups for the last 20 years, M&A seems to be something that's only done by the larger corporates. So again, if we're talking about an SME paradigm, a self-limiting belief within SMEs, and maybe I'm generalizing here, but certainly the SMEs that I'm working with and what I see, and given my own experience, that M&A does seem to be something quite alien and far-reaching for a small business owner who has, maybe just only hit on the 7 figures, for him to, or her to, start considering what an acquisition might look like is certainly far-reaching. So speak to I'd say about the 3 challenges, but then let's come back to that and speak to some of your work, Nick, in terms of how you're simplifying or changing some of the self-limiting beliefs that exist in the SME world around M&A.
Yeah, sure. And I'll try and simplify the process for people too, so people understand it's not as difficult. But the third point, I alluded to this at the beginning of our call, is you've got to get clear and to some extent realistic on what your business is doing for you. So I think of a business as a wealth creation vehicle. Not solely. I totally get people are out there and they're trying to change the world with their businesses, but the ones that come into my world, most often than not, someone's saying to me, I built my business for freedom, the ability to not have a boss, to make my own choices, but I have not achieved that. I feel more trapped. And the pathway out of that, and this is the thing I say a lot, is you've got to be clear on that life-changing number. We talked before about some figures like 10 to 20 million, like, just a minute ago. But 10 million in your bank account clear right now at a 7%, Vanguard will get you about £55,000 a month in income. Now, I don't know what you spend. I don't spend £50,000 a month, right? I don't need it. I got nice houses and cars and private schools, and I don't need that, right? No one does, right? Like, well, you probably do if you, but the point is, like, £50,000 clear in your bank account, particularly if you've got good tax leverage, that's decent income, right?
Yeah.
But that's 10 million, right? And a lot of people can do more. So the last point I want to make here is go away and be clear on your life-changing number, the number that gets you financial freedom. Remember, financial freedom doesn't mean that that's the end, right? It just means that you don't have to worry about money ever again. Okay. Be clear on that. Be clear on why it matters. And the last question I ask a lot is what you're doing right now in your business going to get you there? And most often than not, people cannot answer that third question. And if they do honestly look at, they go, you know what? Shit, Nick, it's not. And then my thing is, what are you gonna do about it?
Yeah. So I suppose the magic pill here that you would advocate is, well, look at acquisitions. Seriously consider acquisitions. Not only will you acquire new customers faster, but you will give yourself a much greater opportunity of growing your bottom line, which invariably will enhance the multiple, make you more attractive, all of those things.
Yep. It builds value quicker. And remember, so we can get into this a little bit now. How do you define value in a business? Okay, so business is valued. Number one is financials, right? So it's going to be your revenue, EBITDA, your P&L, and it's going to be your balance sheet, right? So that's the first piece. It's going to be quality of your customer base. It's going to be proprietary IP, how unique and remarkable your products and services is. It's going to be people and processes on the construct of how well the business runs, how efficient and effective it is, right? These are the drivers of value. Now, just play this with acquisitions. If I start a business and I have to build all of that, how much of that is therefore unproven? So therefore there's no value. And the financials alone, it's not profitable, there's no value, right? In my world anyway. If I go and buy my competitor down the road because, the owner of that business is sick or they want to get out or whatever else, and they've got, another 100 customers that could absolutely be served by my company, how long is it going to take me to get those 100 customers organically through sales and marketing?
Yeah.
Right. So this is what I challenge people a lot to think bigger. Just think bigger. Don't play small anymore. Think bigger. Yeah. And so to get back to your initial question about how do you do this, right? How does this happen? How can I do this? Well, okay, there's a bit of a knowledge thing, right? You have to understand it, right? So get people in who can help you with it, right? That's cool. That's one thing for sure. But then, like anything, you just make it part of your growth strategy and you have goals around it. So you say, okay, this year, I want to grow my business by this. X amount's going to come organic. X amount's going to come from acquisitions. I'm going to go out there and look for 20 companies as a long list that are interesting with the intention to buy one. And then you just need to understand the process. The process is really simple. Build rapport, right? The businesses that I buy tend to be off people retiring because there's just so many out there, but you've got to build rapport, right? You've got to show the strategic fit. A lot of the times when someone's selling their business, it's about the legacy they want to leave, right? It's not always about the amount of money they make. Back to my leveraging capital, you've got to be able to understand where you can leverage off your balance sheet. I don't advise acquisitions really unless your business is doing around 3 million of top line. So if you're doing 3 million of top line, say about 800K of EBITDA, you've probably got enough of a baseline to then start to work into acquisitions. If you're just hitting the early 7 figures, I would say just keep driving organic a bit more. But if you're in that 3 to 5 sweet spots and you want to get a big exit to private equity, if you don't have acquisitions in there, you are missing out.
So somebody is listening to this now, they haven't considered acquisitions in the past. They're in that sweet spot. The process you have, you assert is simple. So other than reaching out to Nick Bradley to say, help me, Nick, what should they be looking for? in terms of what should now be on their radar? You're saying build rapport, but that's on the assumption that you actually know who you're targeting to acquire in the first instance. Let's take it back a step. I've just lifted my head for the first time. I've started to consider acquisitions on listening to this. You know, I'm in front of
there's about nine steps, Brendan. I was trying to simplify it without it. No, so,
I mean, who should I
give you them quickly?
Who should I be looking for? Obviously, my competition is an obvious one, but you know, who else should I be looking for in terms of considering an acquisition?
So remember how we said at the very beginning, you know, I'm flying the plane, but I'm not sure where the destination is.
Yeah.
Think of your destination as an exit. If an exit is what you want. Now, there's two types of exits, right? There's the exit of selling your business in a capital event, which gives you the big zeros in your bank account. There's also exiting you from the business, where you own the business and you just take a dividend or an income, but you don't run the business. They're both exits, actually. They're just different exits. But let's talk about the exit where you sell. Okay. So let's assume for a second that is the destination. Okay. So I want to sell my business. Okay. The next logical question is, like we spoke about, for what? How much? Well, I don't know. Okay. Well, what's your number? Oh, my number's this. Okay. Well, what's your current EBITDA? That's this. Okay. So to sell it for that, to make the money you just agreed, right? We need to get the EBITDA from whatever it is, 1 million to 5 million in the next 3 years.
Right.
Okay. So I'm building back now just to show this. Okay.
Yeah.
Next question, because I think it will help people to understand the structure of how we think in PE. Okay. So you've got a 4 million delta now on your EBITDA position. Mm-hmm. What's the organic growth rate? You know, organic growth. You've run the business for the last few years. You know this. What's your growth rate? Oh, it's this. Okay. So over the next remember, we're going to sell in 3 years. So in 3 years' time, you're going to get to about 2.5 million EBITDA from 1 million organically. But your goal is 5. So you need to find 1.5 million of EBITDA from acquisitions. So now you know what you've just done there is, you know exactly what you're looking for. You're probably looking for 1 to 2 businesses doing around 3 million top line.
Right.
Okay.
Yeah.
Then it's okay. So let's look at adjacencies now. So my business does this, sells this product, this service to this customer. Okay. Think about your customer for a sec. What else is your customer buying and who from? Right. Oh, they're buying this over here. I'll give you a live example I've spoken about quite a lot because I love this industry. Landscape gardening. I talk about this a lot in security, my favorite industries. So I buy a landscape gardening business on the west coast of Florida, okay, from a guy who's retiring. Okay, the business is doing, I'm going to do a live example for everyone, Brendan, it's all right. Okay, the business is doing 3 million top line, making 1 million EBITDA. Okay, let's play with that for a second. Yeah. Okay.
Wonderful.
Okay, all of the customers of that landscaping business are gated, strata-based housing communities, beautiful housing, gated communities in West Palm Beach. Okay, work with me here. What does someone who owns a beautiful house in a gated property in West Palm Beach also buy that's associated or adjacent to landscaping?
Yeah, you alluded to it at the outset, security.
Yeah, and cleaning.
Cleaning, yeah. Yeah, of course.
Okay, and there's probably a whole heap of range of other things. So, and a lot of those communities buy in what we call group buys. So they don't just go out there and individually choose a security guard. They buy as a group. So if I've got a landscaping business and I want to sell that to private equity, and I know my delta is that 1.5, I'm going to start looking for commercial cleaning businesses, security businesses, maintenance businesses. So I can form a little group. Let's call that a home services group. Okay, you with me?
Yeah, absolutely. No, I'm loving this. Yeah.
Okay, and all of a sudden, I've got an asset that can be sold to private equity for 40, 50 million or more. My business. Now you talked about people and processes.
And
now my core business.
I'm visualizing this as well because I've been in where you've described.
There you go, right?
In Florida.
But well, yeah, I know it's a lovely part of the world, right? and I'm going there in a month's time. Yeah. But I want to make this super clear. So as the business owner listening to this, they're going, oh, but what about my business? I can't run my one business. How can I run 3 businesses? Right. Okay. So let's play with that. So we kicked off this conversation saying, you asked me about what does it mean to scale with purpose? And I said, it's about your identity. So you've got to change your skill set and your mindset. And that's about leverage, and that's about trust, and that's about, those sort of things that are really important. So, if you're going to build a business that's doing that sort of figure, 5 million EBITDA, which would be an 8-figure business in my world, right? So the magic number of 8 figures to get to that level of profit, you're going to have someone running your old business. You're not going to be running the landscaping business anymore. You're going to have a COO or a general manager running that. You're going to have acquired someone who was already probably running the security business. You're going to have acquired someone running the commercial cleaning. Your job is now either like a group CEO or a chairman, and you're thinking strategically, right? So if you've got it right and you've understood exactly what I've said here on this podcast today, you're not running the business anymore. Okay, you're not the cog, the linchpin, the bottleneck, right? But this is how you have to evolve, and that's what I mean by thinking bigger. That's kind of what I'm alluding to.
Yeah, and this is a line that I often cite on the podcast, and it goes back to the findings of a 2015 Scale Up Institute report that cited lack of ambition by the founder being the biggest impediment to companies reaching scale. Now, I mean, you'll know these numbers as well. Again, I repeat them a lot. In the UK alone, there's 5.7 million SMEs. In 2018, those 5.7 million SMEs contributed £2 trillion worth of revenue. Half of that, 1 trillion, came from 34,000 SMEs who are scale-ups. So 0.6% of the total SME, the number of SMEs in the UK. If we can change the mindset, then we're going to significantly change the fortune as well of a lot of business owners, but also the opportunities that will exist for the people that exist within those businesses, that are currently employed within those businesses, the local economy, the communities, and nationally, in terms of moving that 34,000 figure to, let's say, 40,000 even, or 45,000, just by what you're alluding to, is just by changing the mindset. And ultimately what you're asserting, Nick, is that this isn't complicated. There are people out there who can support it. And it's just a case of actually lifting your head up and considering the possibility of doing this. But what you're saying is this is a tried and tested model of scaling your business.
Well, this is the thing. I remember we had a conversation ages ago about this, and it's just something that's overlooked because the thinking, let's call it a limiting belief, is that that's what the big guys do. Yeah. But I mean, I've talked about this a lot, about the number of businesses that are being closed down. I mean, in America, I think the figures are, and this may have changed a little bit, but the last time I looked was 1,600 businesses per day are closing down.
Wow.
And these are not startups. These are profitable businesses. And they're closing down because of the baby boomer transition. So I think it's 2030, every person from that baby boomer generation will have reached 65. So that's what, 8 years more?
Yeah.
So, I mean, it's crazy. I mean, the thing I get people to do this is go to Biz Buy Sell. A lot of the stats are in US, but they're global stats. Like baby boomers is a global thing. But go to bizbuysell.com. And it's effectively a businesses for sale site in America. And you can search industry and geography and all sorts of things. But you can also search by seller financing. And effectively what that is, for people who've never heard that before, that's people who are selling their business, but they're going to finance the deal for you. Okay, so what that means is you're going to pay for the business over time from the profits in the business that you acquire. So let me say that again. You're going to pay for the business, right, over time. 3 years is the usual amount, from the profits of the business, right, that you're acquiring.
You see, Nick, if something sounds too good to be true, it normally is, and that sounds for a lot of people, that's going to be difficult for them to get their heads around.
Go and search the website.
Yeah.
It's live. I mean, there's hundreds.
Yeah,
there's hundreds.
There's the challenge to our listeners. I'm really conscious of time. Actually, the last 40, 50 minutes has flown, and we've spoken about mindset on a number of occasions. What's required of the business leaders who have a self-limiting belief? You know, where do they start to change their mindset? Where have you seen, you know, great exemplars of this from the CEOs that you coach, the business leaders that you've come across, who, you know, are all maybe struggling with this concept but have gone on to do it successfully? What's the pathway from a mindset perspective, Nick?
Yeah, so mindset, my approach to mindset is not sort of the ethereal approach, you know, which is, you know, sit down and visualize and do affirmations and meditate and all that sort of stuff. And I do those things, right? So I'm not saying that there's anything wrong with them, but I'm also a big believer that you can't meditate your way to success, right? That's part of the process. But mindset is really, if you get down to the nuts and bolts of this, mindset is really how you think about, you know, what is possible, and doing that from a position of not constraining yourself by anything that is limiting. So we talked about limiting beliefs. Limiting beliefs and mindset sit in the same ballpark as far as I'm concerned. So my personal view on it, if you ask me, my personal view is, and I've said this, you can only scale a business to the level of your mindset, because if you are too closed and too insular, you're never going to be able to see the opportunities. And the classic way of explaining this in a simple way to people is, you know, if you say, you know, a certain car or a certain color, you know, if you say, can you see that color? You suddenly see it and you can't unsee it. Mindset's the same thing. If as soon as you see opportunity, or see, like the acquisitions thing is probably opening up a whole heap of different thoughts for people. Really what I'm doing there is challenging your mindset. I'm challenging your belief system. I'm challenging your view of what is possible from a different frame of reference. Okay. And so if people are closed, so you've got this idea of kind of an open mindset, closed mindset. If someone's got a closed mindset, it means that they are not open to opportunities, and therefore they're not open to seeing the things that are in front of them. And just by the sheer definition of that, you are going to miss those opportunities which are going to get you to your end game.
You've given
okay,
you've given a heap of value, Nick, over the last 50 minutes. And I'm always conscious of ensuring that when people take the time to listen to a podcast like this, or your own wonderful podcast, you know, it's taking action on it. Now, before we come to the close, and I'm going to ask you for 3 timeless takeaways, given your broad experience, what action would you encourage people to take, just given the last 50 minutes, and especially around mindset? If they were to do one thing after listening to this podcast, what would you encourage them to do?
Yeah. So I say this, this is my one thing that I say to a lot of people: go and get a journal out or a piece of paper or whatever else, and answer the 3 questions that I posed. So I'll go through them again very quickly. Because remember, my whole thing is about creating freedom from your business, right? So if you're not there right now, if you haven't created freedom from your business, there's a problem, right? You don't know what you're doing, or whatever it is. There's something that's stopping you, because you would have done it. Okay. So the questions are, again, what is the number, the life-changing number that's going to give you that freedom? The ability to do whatever you want with whomever you want, absolutely living life on your terms, so that you don't have to think about the money thing again. Because as soon as the money thing leaves you, I guarantee you'll think about impact.
Yeah.
You'll think about legacy.
So true.
Right? And you'll change the world, right? You'll go and do something bigger. So that's the first thing. What's the life-changing number? What's that, get rich once number, right? Why does that number matter? And that's not about the Ferrari or whatever it is. That's about, how does it serve you and others, right? Maybe it's just about ego. Maybe it's the fact that proving you can do it, right? It doesn't matter, but why? And then the big question is, what you're doing now in your business going to get you there? That's my one thing. Go and do those questions, spend an hour on it, really think about it, and that will hopefully open up a different possibility for you.
Those are great. Really great. And look, I really am conscious of your time. We've
We could talk forever, couldn't we? This could be like, this could be your first 2 hour bit. We get into all this sort of stuff.
I would do 2 hours if you had the time. There's no issue with it. In fact, given the fact that you have inspired me to launch the podcast, I would love to invite you back for this is going to open up season 4. But but I'd like to invite you back for one of my memorable numbers, one of my milestone numbers. So we'll have to get you back for number 100.
Oh, okay. Now, if everyone's going to tell you, Brendan, don't bring that crazy Australian dude back on. They're going to say like he just said stuff that really challenged my essence and my being.
No, and this is, look, you and I both believe in this. If time is the most important currency we have. If you're going to take the time to listen to something like this, then act on it. You alluded to it earlier. We all of this stuff's out there already. There's nothing new that really we will bring. It's the application of what you're hearing here, which is really going to make the difference. And that's why kind of challenging people to answering those 3 questions is really important. Before we close, again, it's something I always ask my guests. Can you provide us with the 3 timeless takeaways? And given our audience is a very similar audience, albeit less, I will acknowledge what 3 timeless takeaways would you leave for our audience today, Nick?
Okay, let me just for context, takeaways from our conversation or just life in general?
Life. You've had lots of, we didn't even get into a lot of it today, but just life.
I'll give you some I'll give you some things that have helped me, right? And these are personal things, so therefore they may not resonate with everybody, but they've helped me. So the one thing that changed my life was the Zig Ziglar quote. You can get everything that you want in life if you help enough people get what they want and need in life. And that's a bias towards contribution.
Yeah.
So the idea is, don't think about what you want to get, think about how you can serve. Okay, and then you'll get everything anyway. So that's the first thing. The second thing is I'm going to talk about energy for a second. We didn't get into ultra running and all that crazy stuff, but the secret to sustainability and resilience when you're on that entrepreneurial roller coaster, right, where the good day and the bad day can be the same day, right? The secret to that is energy and state. Right. I know you talk about this, Brendan. We've connected on this beforehand. This is about habits and routines, not necessarily goals and intentions. And I don't profess to say that the stuff I do is going to work for everybody. So all I want to say at this point is just lean into that. Lean into the stuff that's going to give you maximum amounts of energy, because that's the stuff that's going to help you both emotionally, physically, mentally, psychologically on the journey. Okay, so that's the second one. And the third one, we didn't get into this, but the third one is, if you're not doing this already, and this is actually in my little guide as well, it's the last point. The environment that you're currently in, or the people that you are surrounding yourself currently with, are potentially holding you back. So however you decide to do it, call it coaches, mentors, whatever, masterminds. I go over to the US once a quarter and throw myself into some crazy masterminds over there, because I need to change my environment, which will then refresh me to go again. And I do that every quarter. So if you're not doing that right now, if you're the only person that's in your business and you're not broadening those horizons, then that is also going to be something that limits you.
I love those. This is something that, again, we're completely aligned on. And it's, again, I coach around this. Serve as many people as you possibly can. Don't think about kind of the bottom line number, because it ultimately is a byproduct of the number of people that you can serve. So love that quote as well. The energy management, again, I speak a lot about this, and I think of the CEO as the chief energy officer, not the chief executive officer. So it's critically important. I mean, if there's one thing that CEO is responsible for, is bringing positive energy to the workplace every single day, to every single conversation. That if that's the only thing they do, they are delivering value by doing that. And the third, and your environment's so critically important. And as you were speaking earlier about answering those 3 questions and starting to change, challenging CEOs to change their mindset, one of the most powerful ways of doing that is get into a room with people whose mindset has already changed. and I know you run a program. Nick, do you want to mention the program? We'll come to kind of your contact details and how people can reach you.
I was going to mention your program, Brendan. I was going to say, get everyone join your program.
Yeah, you're very kind. Yeah, look, and we certainly do. We've been very successful in the 2021 program. We're running the 2022 program, and I see the environment firsthand. People come into that a little bit reluctant, maybe that feeling of having imposter syndrome. And when you spend a year with others who have aspirations to scale, I mean, I see the graduates of the 2021 program, they are bouncing out the door. I mean, this group of people are going to change the world within the respective industries. There you go. It's great to see.
It does work, this crazy getting together thing. Right?
Well, absolutely. My mother used to say, walk a mile with a man with a limp and you'll start limping yourself. But, you know.
We're talking about the opposite of that, though, aren't we? Really?
Absolutely, we are. Absolutely. But that's the importance of the third takeaway that you've mentioned, Nick, in terms of make sure you're surrounding yourself with the people that you aspire to become. And you know, you launched a program this year. Do you want to mention your program?
I'll talk about what I tend to sort of say to people is you know, firstly, you know, my podcast has changed a bit. So it was Scale Up Your Business. It's now Scale Up with Nick Bradley. Partly because the guests that I'm bringing on, certainly the last few episodes and the ones that are coming up are incredible. I've got a guy called John Assaraf coming on Mindset very soon. I've got James Altucher, who's founded 20 companies and 17 of them failed. Next week, actually, I know this is not time-bound, this podcast, but by the time it's out, this will be out. I've got the president of Starbucks, Howard Behar, who talks about the culture of Starbucks. So I think, yeah, the first place I always say is come and listen to Scale Up with Nick Bradley and you'll learn a whole heap of different stuff and some pretty fun conversations. And then the only other thing I point people to is my Facebook community, which is Build Your Business Empire. So I deliberately called it that because I want people to think bigger about their businesses because most people are just trying to build their business. But, you know, building an empire for me is about income and impact. And if people want to know about my programs and stuff like that, then everything is in the group anyway. So they can learn from there.
Nick, as ever, time has absolutely flown by and I really look forward to getting you back again. I wish you continued success with everything you're doing. You're knocking it out of the park, my friend. It's great to see. And you've always been so accessible to me and I really appreciate that. Whenever I reached out to you on LinkedIn, quite almost a couple of years ago now. Yeah. And how things have changed. So no, I want to thank you and acknowledge you for everything that you've been doing. Thank you.
Right. Well, I appreciate the friendship and I appreciate coming on the show and hopefully even some of my small points today have helped people. That's why I do what I do. So thank you.
Brilliant.